Hi, everyone. We're live now here with the weekly meeting on credit spreads. My name is Greg Kilpack. Could we please have a sound check? I want to make sure everybody can hear me okay. If someone could post a comment that you can hear me, I would appreciate that. Okay. Can you guys hear me? I don't see any comments just yet. Okay, moving forward, let's talk about what's going on in the marketplace right now. We've got China's property sector is having a lot of problems. We've talked about this before. Um, Again, this has the chance to be a very big deal. A lot of problems associated with this. Um, China is the second largest economy in the world, and they're a major trading partner of the United States. So, if this thing blows up, it can really affect us, and it's a big deal. Okay, it looks like a lot of their fast growth that was financed by debt is starting to blow up. It's not just Evergrande; it is other companies as well. There's another one called Fantasia, and there are other groups that are having problems. Now, there are two ways that this could go. It really depends on how the Chinese government, how they do, if they can handle the problem or not. Okay, you need to keep an eye on this, but it really looks like this could hurt uh, our economy and our stock market if this blows up. So keep a close eye on this. I'm doing the best I can to watch it. But several of their companies, their huge companies, are defaulting on their debt. And that is not a good thing. So that's what's going on right now. Okay. Another thing that we need to be aware of right now is that earnings season is starting. Uh, for the third quarter, the earnings season is starting to be released over the next few weeks, and that's going to help us get an idea of where the economy's at. The jobs report that came out recently was not very good. They were expecting 500,000 new jobs, and only like 150 to 200,000 came out, something like that. So the jobs report was disappointing. Of course, they're still talking about tapering how much uh, the financial stimulus that the Fed is putting in, and that's another potential headwind. Also, all the supply chain issues, that's an issue. So there's a lot of things going on that we need to watch and be aware of and see how the market is reacting to it. Okay, so that's what's going on right now. Let's look at the market. This is what's happening in the market right now. This is the Dow Jones Industrial Average, basically representing the whole market. It's actually the Diamonds ETF, which trades exactly the same way. And we can see that we're only down a little bit from the highs. The highs came, let's see, back in August, and we're only 3 or 4% below the highs. That's not very much for the typical pattern. So the overall market is holding up just fine. What's a problem is that about half the stocks in the market are trending down right now. And the market is still showing a little bit of a pullback from the highs. You see right here over the last couple of weeks, we're in a small little channel. We just bounced off a resistance level that we bounced off a couple of weeks ago, heading back down, but the lows are not much lower from this little channel. So what that means is it really is a stock picking market. It really depends on the stock and the sector that you're trading in. Okay. That's going to make a big difference as far as your trades. You want to kind of have an idea about what the sector and the market is doing at all times because that's going to affect your trades. If this thing in China blows up, it could conceivably start a new bear market for the world, really, because what happens in China is going to affect the United States, and what happens here is going to affect the whole world. All the financial markets are connected these days. Very small world these days financially. So if China blows up, it's going to affect us. Okay, so one of the things you need to know about earnings season is that you don't want to place credit spreads with a trade going over earnings, because earnings could really affect the price of a stock. And so you're taking on extra risk if you sell a call or a put during an earnings announcement. And so that's not something you want to do. You can actually enter a credit spread with a duration longer than the earnings announcement. Like I've actually done that with one of my trades right now. I think it's with Intel, but I'm not going to hold the trade over the earnings announcement. I'm actually going to send out a warning that says you need to exit this spread trade, or you're taking on a lot extra risk, which you probably don't want to take on. Okay, so where can you go to check earnings? So let's go there right now. I'll show you where to do it. I've got it marked in my computer. So you go to finance.yahoo.com/calendar. And when you go there, you get the whole calendar. You get earnings, you get stock splits, IPOs, and upcoming economic events. All you do after you go to finance.yahoo.com/calendar, you just click on earnings. For the day, like today is October 13th, it shows you all the earnings that are going to be announced today, before, during, or after the market. But you can just go right in here, type in a symbol like Intel, and it pops up. And it shows you that right here, the next earnings announcement is going to be on October 21st, which is, I believe, next week. And it's going to be at 4 o'clock. So basically, if you're in a credit spread on this one that I sent out, you want to exit the day before earnings announcements, maybe 2 days before. You don't want to be in it the same day. You want to make sure you get out. Or like I said, you're taking on extra risk. So just be aware of that. This is also something I use for stock trades and for everything else that I'm trading, stocks or options, buying or doing credit spreads. So very useful thing to have. I recommend that you use that on a regular basis before you enter the trades. Okay. Let's see here. Let me show you a stock that I recommended. This is a stock that could do very well in the future, and I think it will, but right now, I entered it about a week ago thinking it was going to take off. It's not looking that strong yet, so I exited my position. Okay. If you're in this trade, or if you're looking at this, I would hold off right now. It looks like there's still too many headwinds for this. I'm going to wait until it trends above $30 a share before I'd consider re-entering this trade. Okay. Let's see, what else have we got? Let me show you something about volume. Let's just go to any chart, look at a 6-month chart. I want to show you a little trick about volume. Now, we know based on the stock price if a stock is trending up or down, or if it's essentially going sideways. There are a couple things that will help you determine, if it's not clear, what the trend is. So one thing is the line in purple I've got is the 50-day moving average. You can see that over the last week or so, it's turned sideways, but it's been mostly up, just like the stock price. Now, most of the time, those will be in agreement, but sometimes stocks are so volatile, you can't really tell if it's trending up or not. Okay. The other thing is look down here at the bottom where the crosshairs are at these volume bars. Most of these volume bars are down here low, but occasionally you get some spikes up like that day and that day and that day. All you have to do to look at the volume uh, chart, the volume bars, is to see which ones are bigger over the last 6 months. It should match the same direction as the stock. For example, Snap is up over the last 6 months. That's obvious, but you should also see confirmation of that in the volume. And so you can take one look at volume. If you're not clear the direction of the stock, or if it's kind of going sideways, you can look at the volume. That's really going to give away the direction that the stock is really moving. So you can see clearly based on volume that the volume agrees with the stock price that we're in an uptrend. Okay, that's great. Let's look at a different stock and see that. Now, this is different. This is Intel, which has largely been going down and sideways. And if you look at the volume, the biggest volume bars on Intel are all in the red. From that one, those two, several there, all of the biggest ones are red. So clearly, Intel is under a lot of selling pressure. A good entry point for credit spread is like what I did when I released this trade. Let me look it up, see exactly what I did. Intel did it on released a little while ago. The date was October 7th, so that was last week. Sold a 55 call, bought a 58 call, and it expires on October 29th, which is a couple weeks away. So what I'm betting on with this is that Intel is not going to break the trend of sideways and down over the next, that it's been over the last 2 months. And I don't think that's going to happen over the next 2 weeks or so. And that's a pretty safe bet. It's looking pretty good. If it even rallies up close to 55, like say 54.75 or so, if it doesn't immediately come back down, I'm going to exit to make sure it doesn't turn into a loss. Okay, so that's what I'm doing with this trade. Okay, now if you have any questions, you can pop them up on the comments, and I'll be happy to answer them. Let's look at some more stocks here. Put a Nike. So this is a tough one because Nike gapped up on this day back June 25th, a few months ago, and it rallied up for a while there, but then it's since come back down. So what's the trend? Is it up or down? Well, over the last month or so, it's down. Over the last 3 months, it's up. So I don't see any really good entry points on this, so I'm not going to touch it right now. We have the opportunity to be picky about when we enter. Yes, that's correct. If we didn't get in to Intel, we do not want to enter right now because it's not a good entry point. Okay. So these credit spreads that we're doing, they're very time sensitive. And so you don't want to wait a day after you get the alert to decide if you want to enter the trade. Okay, you want to look at it pretty quickly. Maybe an hour or two after, you might still be okay. But let me show you a trade that I was working on earlier. This is Visa. Okay. This was just a few days ago, and I was looking at this right there on the 8th. Visa is in a downtrend, and it had bounced up towards the top end of where resistance is. You can always tell where resistance is because it's bouncing off a ceiling and comes back down, which it did right there and there. So we're in a downtrend. We got a bounce up, and they quickly sold it off after it went a little higher than the previous level over about here. Okay. So it went up above here. I was sending out an alert. I was waiting for the next day at the open, which was the top of that red candle. It was, I wanted to see confirmation. I wanted to see it go up and start to confirm that it was heading down. Boom, that's where you enter the trade. Confirmation that it's doing what you think it is supposed to do. If it was green at all at the beginning of the day that day, then I don't want to place the trade. So I wanted to place a trade like around a 230, maybe 232.50 call, sell a call up there, because I don't think it's going to go up there at all. But then the stock fell so hard that day before I could even get the alert out that I canceled it. I didn't even send it. So these are very time sensitive, and you want to do that. But that's actually one of the key things that you want to do. Like, for example, on this day, you got a big rally. This stock is rallying up from the low. And if you go to the next day, it opened, let's see, at the top of the range there and started to climb up. It's still showing uptrend at that point, intraday. Let me go to 927. Let me see if I can show it to you. This is what I like about the 5-day charts on Yahoo Finance, because you can see the intraday. Okay, there it is. This is the beginning of the day on 927. At the very beginning of the day, we're still seeing uptrend. I'm probably not going to want to enter a credit spread on this to sell a call above until it's down here somewhere. Some sort of confirmation that we're starting down. I might even have waited towards the end of the day right here, or even early in the day, the next day, for confirmation that it has reversed. The short-term uptrend is no longer working, and I'm going to go with the downtrend. Therefore, the calls that I sell are much more likely to expire worthless, so I can keep all the money from the income, from the credit spread. Okay, you definitely want confirmation. You want the stock to show you where it's going to go and confirm it, and then enter the trade. You do that, your odds of successful trades go up quite a bit. Okay, that's what you want to look for. Okay, you say you saw the alert, but you were busy that day. Yeah, I understand. You're not going to always be able to do every trade that I send out, and that's okay. And right now, like I said, I'm going to be sending out alerts. I do it, like every week, but we got to be real careful to do either very short-term trades that expire before earnings are announced, or if we are going to hold over earnings, I would recommend you just exit the trade, period, before earnings come out. I don't like the risk involved with it. Okay, let's see. Where do you see the confirmation on Visa? Okay, we'll go back to the 3-month chart in just a minute. But this is all that uptrend that it was happening. It's trending up pretty strongly. The first real sign of a strong down move is right here. That's not confirmation, but that's a good signal it might be near the top. The fact that it didn't rally up further, just bounced a little from the bottom, that's a pretty good sign. But really, I think that's your entry point right there. Lower, it gaps down and starts to trend down. That's a pretty safe entry point. I think that's where I would have entered right there. And I would have, the closest I would have done on this is sold a 232.50 call, or maybe a 235 call. I think that's what I would feel comfortable with. You got to remember, of course, the closer you sell a call, the more likely it is to be filled just on normal fluctuations that happen all the time in the stock. let's see, at the end of the day on the 27th or beginning of the 28th, I would have felt more comfortable about half hour to 60 minutes into the day on the 28th. Because if this is a strong uptrend, it shouldn't be down there. So that's really what I'm looking at. You could even have waited a little further. You see a little bounce. You think maybe it'll trend up from there. But then you see it quickly peter out. So really, any time over here, you could have done it safely. Sold at 230, 232.50, 235 call, and then a higher call to protect yourself. All right, so that's what I'm looking at for Visa. Let's look at Procter and Gamble. Okay, you saw it? You see it? Okay, very good. YouTube user, thank you. Okay, so Procter and Gamble. Let's look at the 3-month chart on this. Now you know that Procter and Gamble is a great, big, enormous conglomerate company. Okay, they're huge, and that's why they're one of the companies in the Dow Jones Industrial Average, the Dow 30. Procter and Gamble does have moves. Okay, it will move. You can see that with the trend that happened here. That's the end of June up to end of, mid-September. That's 2 to 3 months there. That's a pretty good move, but it's not huge. It's only 132 to 145. So when you see a new downtrend, we got a lower low there, and then it bounces up to a lower high and goes sideways. Let's look at that. This is actually one of my favorite patterns right here. The downtrend, a bounce up to the high, and this is what I love about it. Right here, the stock suddenly goes sideways, and you see it top out at almost exactly the same price for 3 or 4 days in a row. That's a really good sign that somebody big, like a hedge fund, is selling as much shares as it can right there. You may well notice that it bounced right off of that purple line. That's the 50-day moving average. I recommend that you put that on your charts because it's one of the big ones that the professional money managers look at. They look at the ones that I have on this chart, the purple one, which is the 50-day. Way down below, you've got the green, which is the 200-day moving average. That is the granddaddy of all. If a stock starts to trend below the 200-day and stays there, that's bad news. It's likely to crater after that because that's the signal of basically your ejection button for a hedge fund. Okay. So anyway, the stock goes down to the bottom of the Bollinger Band. We get a bounce up to the mid-level, hits the 50-day moving average, bounces right off it. And you see it go off it. You know, it could coincidentally go off it for a day or two. It doesn't mean that much. But when it goes suddenly sideways for 1, 2, 3, 4, 5 days in a row, bouncing off the 50-day, it's a pretty good sign that it's not going to go higher from there. If I were to place a stock trade, I would have sold it around 142.50, I'd imagine, with a stop not any higher than 143 and a quarter. You can play it pretty tight with this setup because it's not supposed to go up there. For a credit spread, you could sell a 144. I wouldn't probably want to put it any closer than that, or 145. The thing is, you could do a 143. It's cutting it kind of close. You want to exit if it even comes close. So that doesn't really give you much room to work with that. Even with this setup. So I like to give it myself a little more room in case I've misfigured or there's just normal fluctuations in the stock. And so this looks like a pretty good setup. It looks like it's going to trend down from here. Might chop sideways for a while. Either way, it might be a good setup for writing calls up around 144, 145. Okay. Let's look at something else. Let's look at Walmart. See what Walmart is doing. By the way, when you're writing credit spreads, when you're selling calls or puts, it's great to have these great big fat slow moving stocks that are in the Dow Jones Industrial Average. So basically any stock that's in the 30 Dow components make for great trading for credit spreads. It's a great place to look for trades. With the exception of tech stocks like Apple that tend to be kind of volatile, or do not write credit spreads on pharmaceutical stocks. One word out of the FDA could send the stock spiraling, rocketing up or crashing down. I don't even like to trade them with stocks or anything. I don't touch pharmaceuticals except for maybe a long-term buy investment, but we're not talking about investments here. Okay. So Procter and Gamble, Coca-Cola, McDonald's, Dow Chemical, Visa, 3M, all of these are great stocks to write credit spreads on if you're not quite sure what to look at, what to look for, which stocks to trade. Now, of course, you can do credit spreads on any stock. Snap is not in the Dow 30. And I wrote a put. I sold a put down here. I think it was 70 or 71. And it came right down to, I think it was right there. It briefly went below 71, and I wanted to avoid taking a big loss on this. So I got out quickly for a small loss, I believe it was. But it did bounce back up the way I thought it would. But you really got to contain your losses on these credit spreads because the losses can wipe out your profits. Okay. When you place a credit spread, you just want to watch for how volatile the stock is, and if you want to risk, the money you make versus what are the odds of it actually getting hit at that price. But it's held support really well. This is a very strong stock. It's held the support level of 70 really well. So that still looks like a pretty good place to enter the trade as long as it's not over earnings like we talked about. Okay. Does anybody have any stocks you want me to look at? I'd be happy to do that. If you want me to look at some stocks, otherwise I'll just pull up some stocks. Be happy to look at something if you want me to. So let's look at IBM. This is interesting. Over the last few months, IBM's in a downtrend, but it did have a sharp pop up. You don't actually see such a strong pop like that come from the low end of the Bollinger Bands to above it. That's kind of rare. We had a trade on this, and we hit a max loss on this one on this day because it gapped up and ran really fast. So that one didn't work out. To avoid losses, you have to watch carefully, and you'd want to exit at the very beginning of the day as fast as you could. It's the only way you could have gotten out on that particular trade. Sometimes things just don't work out, and you have to guard yourself against losses. Okay, let's look at Palantir. PLTR. In case you didn't know, Palantir Technologies is the company that does all sorts of secretive technology work for the government. And so I think the odds of them failing are zero. Okay, first off, the first thing I notice is that this is a pretty volatile stock. So I would want to get a pretty good income to do this trade. What else do I see? Going back just about 3 months. By the way, I like to look at 6-month charts just to see where a stock has been. And you can see this is pretty wild and wily stock. But then I will zero in a little bit closer on how I actually want to do the trade. And again, looking at the volume down below, it's all green. All the big ones are green. Somebody's loading up big on this stock. Yeah, you got a gap up on green. That might have been, I'm not sure what that. No, that wouldn't be earnings probably. But anyway, this is a pretty volatile stock. I would be probably more inclined for a volatile stock like this to buy options, like buy calls or puts, rather than sell them. It just, when you sell credit spreads, when you sell options, you want predictable, you want slow moving stocks, and then you want to get a decent income for them. Okay. Let's see. We had a question on IBM. IBM did not favor us. That is true. Could we have played a different strategy to cover our losses on IBM? Well, the thing is, the day before on IBM, let's go back to IBM. I don't see a good entry point on Palantir right now while we're on this. Let me go back to IBM. Okay. That was the day right there that killed us for IBM. Right there on October 1st. And it blew right through the resistance level that I thought that was right over here. Up until that day, IBM was looking like it was going to bounce off the 50-day moving average. It's already in a downtrend. I did not expect any of the, especially this great big day right there, to happen. It just blew right through. So the only way that I could see that you could avoid this, there's a couple ways. Number one would be to exit if the stock even had this day where it looked like it was going to come back down right there and it started to go back up on these 2 days. You can be like those, what are they? Those prairie dogs that hide in the holes. They come out and they stick their heads up, they look all around. We want to be super, adverse to risk and any possible danger. You could have got out right there with even a bounce. A lot of stocks will do something like this, bounce up to a right here or right here, and then trend back down. If you wanted to be super careful, which is a good thing to do when you're writing credit spreads, you could have gotten out on one of these 2 days. Or if you were watching really closely, exited right at the open on this day when it started to go above resistance and above the 50-day moving average. That's actually what I tried to do before I could actually get out. It zipped right up. So I took a loss on that. That's the only way I can see that you're exiting on this, unless you have your stop losses already set in the system, which is always a good idea. Okay, hope that answered your question for you. Let's see, HLT. Let's look at that. Okay. HLT, Hilton, is obviously in a pretty strong uptrend right now. Just about a month ago is trading, 2 months ago, it was trading around 119 and now it's up at 142. This is what I don't like about this. I don't want to enter this trade because this thing could have a sharp sell-off at any time. It's too late in the trend to jump in on it. I don't trust it. I've done it too many times in my career where I'll buy the stock and then it has this reversal, and it reverses, which it's likely to do at some point soon, I would think, bouncing off the top of the Bollinger Bands. You never know when that's going to come. So I just don't want to enter it. If I was going to enter this trade, this is what I would want to see. I would want to see a pullback that goes at least to the 50-day moving average, if not to the bottom of the Bollinger Bands. And then you want to see a J pattern where it goes down, it bounces off and starts to curl back up like the bottom of the J. That's what I want to see, because then you see the bounce, you see confirmation. Once you see that confirmation, you would expect the uptrend to continue and for the stock to rally all the way back up to here again. That is where you enter your trade. That's your basic pullback entry point. Okay. You just don't know when this thing is going to have the big pullback, and so I do not want to enter the trade on this right now in any way. I don't want to buy a call. I don't want to buy a put. I don't want to sell a call or a put. I just don't have a good feel when the pullback's going to happen, but it's going to happen at some point. Okay. But on the other hand, I'll have confidence if it does pull back to the 50-day, bounce off it for a few days, and then start to head back up. Boom, that's my entry point. That's actually a good entry point for the stock to buy the stock, because then your reward versus your risk is good. If you're buying the stock, let's say at 130, and you see the J pattern where it's starting to go back up, you could buy it, say, at 130 with a $2 stop and expect it to go up to 140. You're risking $2 to make $5. No, wait a second. $2 to make $10? 5 to 1 is what I mean. Reward versus risk. That's great. That's how you set up a good stock trade. But with options, the entry is the same. The numbers are a little different for the prices of the options. So let's say I did that. Let's say Hilton rather goes down to the 50-day. It does the J pattern like I'm talking about and starts to go up. I sell a 125 put, maybe even a 130 put, 127.50 put, somewhere in there. I'm going to sell a put and buy a lower put for protection. And I'm going to expect that J pattern to continue. So it goes all the way back up. If it flips around and starts to go back down below 130, it's looking wrong. I'm out. I want to exit my option spread because the stock is not acting right, because it has the potential to turn into a loss, and I do not want losses when it comes to credit spreads. So I'm out. Bam. Okay. That's how you do it with the credit spreads. That's what I would want to see. But I just don't see a good entry point right now for Hilton. By the way, we're thinking about lots of different things that we can teach you. And we're thinking about offering a technical analysis course. That's one of my specialties, as you can plainly see when you hear me talk. Little things have big signals on these stock charts. If you know how to interpret them, it's worth a lot to you. So we're going to sell a program on that, and it's going to be a big deal. And we're not going to charge $100 for it. It's going to be well worth it for you. So look for that. If there's anything in particular that you want us to teach you, we'd love to hear about it. We'd love to have an email from you. I read the emails when you send to options@thetradersplan.com. I see those. So you can make suggestions. If there's anything you want to learn about, we can offer programs for it, or I can, just tell you what I've learned in the weekly course here, in weekly seminars. Okay, going back to comments, the YouTube user, thank you for your comments. Hilton 11-19-21, 150 call. Let's see. You sold the 150 call and bought the 130 call. You bought the 130 call? Okay, you got two separate things going on. If you sold the 150 call, you want to buy a higher call for protection. That's kind of an advanced thing you're doing there. That's not a straightforward credit spread. Okay, you're saying you need a technical analysis course. Yeah, I offer, little tidbits here and there, but if you want all of it all at once, you should take the technical analysis course. I guarantee you it'd be worth your while to take that, because there's great knowledge in there about this. Now, I've been trading options for a long time. At some point, we're going to dive more into buying calls and puts and when you want to do that. But for right now, we're like we've said before, we're assuming that credit spreads are something where you want to generate income, safe income. And that's what credit spreads are for. You can do that. Okay. Let's see. I also have a background, like I've told you, in growth stocks. Um, Two of my favorite growth stocks that I'm waiting for a good entry point on. One of them I've told you is TCNNF. Another one is Amarin, symbol AMRN. Alpha Mary Romeo Nancy, I guess. Those are good stocks that are growing well financially. If as long as the market doesn't, go down from here, I think they'll do really well long term. Remember, you heard it here. Okay, let's see what else. What else have we got? That's all I've got for today. So unless you have some stocks you want me to look at, we will call it a day for this week. Let me see if we can find one more that would be a couple of my favorites. One is Disney. Disney still appears to be stuck in this sideways move. Overall, because it's in a downtrend and the market is kind of in a downtrend, I would really, again, prefer to see it bounce to the top of the trend around 185 and sell a call above that. The thing is, on this, it has bounced off this support level right there. It probably will continue to do it, but since I'm so nervous about the downside and the economy with China and the United States, I'm pretty hesitant to sell puts right now. Everything I'm selling is on the top side. So I would want to wait for Disney to either bounce off this resistance level somewhere up here around 185 and start to head back down. That's ideal. Or possibly if I see it bouncing off the 50-day moving average, maybe. But right now, that's the number one place I would want to sell a call right there. Okay. Great stodgy stock. It does move sometimes, but I do like writing calls and puts on Disney. Let's look at one more. 3M still in a nasty downtrend. It's going to bounce at some point. Again, upside down J. If it goes up to the top of the Bollinger Band, or maybe if it goes to this price level right here, like you see it, and goes sideways for 4 or 5 days, is my favorite indicator. I'm going to probably just wait and then write calls above it. So that's not a spot where I want to enter a trade right now in any way for 3M. Just FYI, I give you credit spreads. I just sold EXP 3 contracts at 86 cents and bought back today at 28. Oh, very nice. Yeah. Now, if you have shorter term moves that you're playing, you can actually day trade these credit spreads. That's not really what I'm looking to do when I teach this. I'm hoping that all of our spreads will expire worthless, so you make maximum profit. But there's nothing wrong with ringing the cash register and trading it. So hey, if you make a quick 50% gain in your trade, and you feel like you're not sure what's going to happen in the future, by all means do it. So nice job, James. Let's look at Expedia for just a second. Let's see. Okay, let's see. We sold 3 Expedia contracts at 86. I'm assuming that's the price you got for it. Hey, James, can you tell me what kind of a spread you did? You did a call spread or a put spread, and do you know the strike prices that you did? Put that in there if you have that. But it looks like you played the bounce and you made quick money off that. So very nice. We can go back to that. Verizon still in a downtrend. Oh boy, Verizon fell off a cliff. Okay, so let's say that I sold a call up here around 55 bucks a share. Let me see. We did that at some point. Okay, we did that back in August. Made some money on Verizon, but we didn't do it recently. Okay, so let's say that you did sell a 55 call on Verizon, and then it drops off like this. There's two types of value you get from an option. You got the intrinsic value, which is based on price, and then you've got the time value. So basically, if you still had 2 weeks left of time value in Verizon on your credit spread on the call, 55 call and maybe 56 call that you bought on that spread, if you did that, your intrinsic value just fell off, which is what you want. So the only thing left is really time value. You could just, and what I would probably do at this point is just let it expire worthless and take the maximum credit. If you want to hurry and go on to the next trade because you've got something else that looks good, go ahead. You can exit the trade right here and you'll make I would say about a 75% profit, 50 to 75% profit on this. Take the money and run and go on to your next trade if you want to. Personally, odds are really high of it being max profit, so I would let it expire personally. Okay. About AT&T, sure. Yeah, looks like all the communications companies falling off a cliff here. So, again, it would have been good to sell a call up at this price somewhere around 28. Um, right here, yeah, I definitely don't want to sell a call or a put because I don't know where it's going to bounce. The trend has already started and it's too far along. I don't. This thing can do anything at this point. It could drop all the way down to 20 bucks a share or 22. It could curl around and go sideways. It could go bounce and go back up to 27 and go sideways for a month. I really, there's no read on it at this point. If I had to guess, considering how far it's fallen so quickly, I would expect about a 50% retracement, maybe a bounce up to 26 or 26.50 over some point, and then it to continue downward for a while and bounce around. That's just a wild guess, though, at this point. Really don't want to enter a trade of any kind on this right now. Reading your comment there, James. Thanks. Like your comments, wasn't aware you'd hoping to let expire for max. Not bragging. No, we're not bragging in here. We're just telling it like it is, right? Just meant to be informative as an example. Okay, yeah, no problem. A little bragging isn't a bad thing because trading is not easy. And if we have some good winners, hey, go ahead, brag a little. We're good with that around here. Okay. Let's look at oil real quick. I think this is oil. Yeah. Oil's in a strong uptrend again. I want to see a pullback and then a J pattern for an entry. Oil is likely a response to inflation. Okay. If you didn't know it, we've got some serious inflation going on. If you look at the price of commodities and food prices and oil prices, everything's going up because the government has put so much money into the economy to try to keep it afloat. So I would want to see a pullback on oil and gas to some point. I don't know where. It's a bit of a jumpy ETF. It's kind of all over, so it might be hard to spot the J pattern. But I want to see a pullback and then I wanted to see start to curl back up. I think this is going to be an uptrend that's going to continue because inflation is not going away anytime soon, unlike what the government is trying to tell you. Okay, so this looks like, yeah, going to see a pullback at some point, but the uptrend is likely to continue on this. Look at Apple real quick. James, you sold the 3 contracts, 15 October. Oh, that was on Expedia. Let's go back to Expedia in just a minute. You can just see that Apple has big moves, a little too volatile. You better get good money if you're going to do a credit spread on this. And your entry better be pretty good for this. I tend to avoid Apple. It's kind of a tech stock, and it can be volatile, even if it is in the Dow. Okay, going back to Expedia. On 9/29, sold 3 contracts for $172.50. Where is that? 9/29 right there. Okay, good, beautiful. I like that. Sold on this day, where it was trading below 170 the whole time. You sold a 172.50, which is a little bit higher than that price. That looks great. That's awesome. And it expires in a couple days, it looks like. Excellent. And since this is bouncing around, for you to lock in the profits on this, I think is a wise decision. Let me show you one other thing about options. On this particular trade, if you sold, let's see, 29th, if you sold the 172.50s, you'll notice that real briefly, it bounced above that price for a little while. Just enough to come down on this day, and very briefly on this day, on the 1st. Okay, intraday, it usually doesn't matter if the stock goes where you don't want it to go briefly, above, say, the call that you sold. Because even if it does, it doesn't mean that the option is going to be exercised against you. Remember, we're selling a call, and the buyer has the choice when to exercise the option. So technically, they could have exercised it, but 90% of the time they don't. They let it go close to expiration. Okay, so just because it does go up there, it doesn't mean that it's going to be a losing trade, that you're going to lose money on it. But that is cutting it pretty close. I think it is very wise that you got out and made a profit. So great job, James. Excellent. Okay, so I think that's all I have, unless someone wants to throw in one last stock to look at. I'll look at one more. I'll pick it if somebody else doesn't. If you want me to look at something, I will look at it. But that's what we're doing. Again, make sure that you check earnings. I gave you the place that you can check for free on Yahoo Finance. Once again, finance.yahoo.com/calendar. Let's do it right now. I'll show you. I've got this exact address saved, so I can just click on the tab. To check for earnings, all you do is click on earnings right there. Scroll down a little bit and type any stock that you want to check earnings on, just for fun, like Netflix. And it pops up, and Netflix is going to announce their earnings in the middle of the trading day. It looks like on October 19th, which is next week. So again, you can place an option, a spread over that time, but you don't want to be in it when it's actually announced. You got to exit before. You got to remember. Okay, that's all I've got for now. So let's call it a week. If you have any questions, I'm happy to answer them. Just send a question or a comment to options at thetradersplan.com. I'll be happy to help you with your trades, answer your questions. And again, if you have anything that you want to learn, like a topic you want to learn, or a trading strategy like buying calls and puts or anything else, go ahead and send me an email and we'll look into it. Okay, that's all I've got for this week. So everyone, have a great week and we'll see you next time. Thanks a lot, everyone, for being here.